welcome back this afternoon to the second roundtable here in Switzerland for the World Business Angel Investors Week. In this session, we will be focusing on technology, banking, and the importance of networks in Switzerland. Boy, do we have a treat in store for you guys this afternoon. Joining me on the panel today is Andreas Eaton, CEO of F10, the FinTech Accelerator for the Swiss Stock Exchange, Günther Dobrau, Partner and Head of Legal at PwC in Switzerland, as well as Partner at the Excelix Capital AG. We have Nicolas Huras, the Managing Partner at Mika Group and co-founder of New Native. And last but certainly not least, we have Sergali Abdilbekov, Head of the Global Strategy for Wealthy Client Communities at UBS. Thank you, everybody, for joining us. We're going to dive straight in with the first question this afternoon. And the question is, how are banks, stock exchanges, and large institutions and institutional investors in Switzerland innovating? And more importantly, who are the movers and shakers? Who would like to go first?
Well, maybe I go first. It's a super interesting question. And first of all, thank you for inviting me. It's a pleasure to be here. I think the one thing we've seen, and obviously COVID has been a little distorting everything, but I think it's the big guys as well as the small guys really starting to innovate in a way we haven't seen it before. And that's quite interesting because obviously, yes, there is the startup scene, which is very, very important, but we at least see more and more collaboration across the board these days.
Maybe I can add from my side. Thanks very much also for the invitation. It's great to be in that amazing round here. I think Switzerland, especially also the banks, they really started to embrace collaboration between kind of startups and established institutions. I think we from F10, that's a bit our mission, right? We want to bring together the two different worlds. And what we've seen in the past is that there's quite some innovation coming from startups and ending up at, like big banks to be scaled up there and used, for, better servicing the end customer.
Maybe something to add from my side is the fact that we see the DeFi actually coming into the picture. There's also the DeFi within the banking sector, how it actually integrates and disintegrates different teams. So there's teams inside the company that become sort of self-sustainable business units that produce different solutions that can be outsourced, etc., off the banking system, and then come back to be insourced as a partner to the given bank. The same comes from the outside. There's plenty of startups, plenty of fintechs that are actually created by ex-bankers, well, like myself, for example, and then the services that we provide automatically get integrated into the main bank as the core business working. So I call it sort of like a decentralized structure that works together in tandem with the core really taking care of the regulatory framework and all the fintechs supporting with different solutions, the main structure.
Maybe just a comment from my side. Thank you for the opportunity to be here. First of all, I'd like to make a little distinction between banking and private banking, since we're talking about Switzerland. Banking usually encompasses all kinds of banking: commercial, corporate, retail, investment banking, and so on. Whereas private banking, and specifically Swiss private banking, means mostly wealth management for rich individuals. Now, having said that, you probably all know, it's not a secret, that every single private bank is trying to innovate. We have a bunch of teams that are called innovation teams or discovery teams or new experiences or new projects, special projects, call it whatever you want. I guess the question, who are the movers and shakers? It's a bit premature to say who out of the big private banks is really moving, because everybody is trying to do something, but there is too much duplication and too little information still in order to actually produce something meaningful. Therefore, probably the banks are looking outside too. And outside is the venture capital. Any startups, any fintechs, anything that is currently innovating without the regulatory framework of the banks to hold them down and slow them down. So the banks are, I guess, forthcoming with some mergers and acquisitions or investments or anything like that in order to sort of source from this inflow of new ideas.
And just let me add, Sergei, actually, very good point you made here. And the distinction actually very important. When I was based in Singapore, I was on the board of a digital innovation of one of the investment committees in the industry. And what we have seen actually, and you know it very well from the big banks, the most money for innovation goes to the private banking. And most money from the innovation is focused on private banking. So the main solution that we see and we've seen so far was on payments, was on robo-advisors, focus on better servicing for wealthy clients, whereas the asset management side or fund management side has been actually stayed in the shadows, which without enough financing coming into the picture. So we feel that going forward, this is the sector that's going to start innovative next and taking advantage of the solution that have been already developed for wealth management for private banking, and that will be afterwards adjusted using blockchain, all the new technologies to service the rest of the bank and the rest of the teams of the bank.
Thank you. We would like to focus on a very specific type of technology, namely artificial intelligence. Now, Sergei, you co-run the Swiss Artificial Intelligence Association. And what I would really like to know from you is what role does it play today in banking? What are its limitations? And where do you see it 5 years from now?
Absolutely. AI is very dear to my heart. When it comes to it, it's all about privacy and processing of the data that the banks gather on individuals. There are plenty of interesting AI projects that cross-match the data to sort of extract the calls to action for the bankers and for whoever, for the partners of the bank. When is the best time to talk to the client? What does it mean when the client talks to the bank or to the banker or to the assistant? What are the client's priorities? Which other products would the client truly benefit from in that moment? Which state of the mind does client come to the bank with? And all these questions, AI currently is trying to AI industry is trying to answer. Some of these technologies are developed internally, but as I already mentioned, a greater number is developed outside of the banks. If we speak about the stage of development of the industry, it's probably fair to say that the whole industry still has a long way to go before we can claim that AI is meaningfully contributing to the client's needs. One of the most coveted AI use cases, to my mind, is the NLP, natural language processing, voice recognition and transcription, so that a voice bot or a virtual assistant for that purpose would be able to recognize clients' instructions 100% of the time correctly, and subsequently do trades, do processing of the documents or payments or open and close accounts, etc. Where I see the limits, it's actually very simple. I already mentioned this. It's a cultural transformation that is currently taking such a long time. The large banks need to secure a permanent inflow of high quality innovation. The only reasonable way to do it, in my opinion, is not by supporting multiple duplicated innovation teams springing up here and there, but rather creating a meaningful venture capital fund with at least $1 billion in capitalization to ensure the skin in the game and the efficient time to market.
You all agree? Andreas, you were
nodding.
Nodding.
Echo what Sergei said. When you look a little bit at the past of what happened in corporate innovation at the banks, when I remember 2015, that all the banks started their own innovation labs, and tried to hire a lot of engineers and talents. In the meantime, I think that most of them have been stopped because it's very difficult in that kind of highly regulated environment really to build up new stuff or invent new stuff. That's why I also fully agree on his statement that these kind of things, these really innovative things are happening outside, where you have less, restrictions and less constraints. So from that point of view, I think this is the transformation happened since we were active in bringing together the two different sides, like the startups and the corporates, and eventually now like investing into promising new technologies is probably the way how you can actually source innovation from the outside to the corporate side, especially in banking, which is a little bit different to other industries. where R&D is much more, at the core of the business, which is in the banking definitely not the case.
Thank you for speaking to the converter. Sorry, I monopolize here a little bit more, but you're speaking to the converter because actually at New Native, that's what we do pretty much. We are the accelerator for artificial intelligence solutions in fintech and not only. So we work on several solutions at a given time, invest money, have a private equity fund that invests in these different solutions. So thank you for supporting that. Going back to Sergey, to your point on the client servicing, I think also one thing that is worth mentioning within artificial intelligence is also the use of transformers, and the use of transformers in terms of the conversation with the client, the automatic responses to the client, the mitigation of client satisfaction, dissatisfaction, or even creating a proper meaningful marketing or proper meaningful advisory models that can be used using artificial intelligence. And that's something we will see coming, especially in wealth management and in investment banking in the next coming years. And we don't even realize when we work now, for example, the OpenAI, and we see what all the solutions that are already out in the market, how advanced they are, and how quickly can they be implemented into the market. So we are here for a very exciting ride in artificial intelligence.
I think it's also important to note that, in particular, when we talk about artificial intelligence, we haven't seen the dominant design emerge yet, right? There is many trying to bring their ideas to market, but it's still predominant design. I think we've seen a lot of machine learning and so forth, and a lot of stuff that is being worked on right now. But especially when you talk about the bigger banks, they're looking at those opportunities coming at them, but it kind of feel like they're only going to put the money behind it once the dominant design is out there. And that is probably going to be proven a bit more in the UK, in the US, Asia, and so forth. And then Switzerland will probably be a bit later.
I also think that some fundamental things within the banks are not really solved. So, for instance, like accessing the data, sharing data in a confidential way, for instance, like, speaking of confidential computing, for instance, or also, making sure that the data is actually usable for these use cases. I think these are kind of fundamental things before you can really apply AI, machine learning, and these kind of things, which are not, developed as they.
Andreas, I have a little comment to that. Thanks for bringing this up. You might be surprised, actually. A few banks do have a sandbox with confidential cloud computing, which they offer to a few chosen ones to manipulate and try out the data that the bank has, or maybe even upload some data from the outside and try it to, into the banking ecosystem. However, I must say, having a little Swiss heritage in terms of a corporate culture in private banking, it's clear that most of the Swiss banks would be very reserved in who they give access to for such things. And we still have a long way to go before this works in an efficient way. So truly, I think the common consensus is that we should build an ecosystem that has a unanimous and common understanding of what's trustable and what's not. And startups / investors into these startups should come together and address the subject as a one unit, rather than every single startup duplicates the pitch for why they should be trying out in a big organization, a large bank or an insurance company, and so on and so forth. So that's where I think the transformation needs to kick in. And this is why we're still slow.
I absolutely agree. And funnily, we invested in the confidential computing startup, right? So the technology is actually available. I mean, the technology can be deployed on any cloud platform, for instance, but the point is that, the banks are not even ready to go into the cloud. So I think this is what I wanted to say, right? The adoption of this kind of solution is not there yet. And I think before you have reached that level of, like standardization and infrastructure, you can't think of, applying some AI things and data sharing models, because it's still not possible. But I think
I'm happy you're mentioning this. So sorry for interruption, Andreas. I'm happy you're mentioning this because I think there is a very important distinction here. The bigger the bank, the more probable they have a contract with a large IT company, such as Amazon or Microsoft or Google, that offer this cloud computing, and they try to do it internally for a few years before they open up. And it's also the reason why publicly it's not entirely obvious. However, if you look into different kinds of sources, news and interviews, you could get the bells rung in those articles that the banks are already on this track. I guess the bigger question here is not that the technology is accessible or not, but rather how fast are we adopting? And Switzerland is notorious for being a slow adopter into the the 200-year-old industry such as private banking.
Does this come from a legal perspective, Gunter, that the banks are reluctant to adopt cloud solutions?
Definitely. I mean, I wouldn't call it so much legal as regulatory, right? Because every major change in the business model obviously needs approval by the auditor / FINMA, and that must be done properly, right? And again, I mentioned it before, it's about the dominant design, right? Once you have something that's standard, then you can just plug in by getting an add-on to your core banking system, then it's easy. But as long as you're trying something totally new, that's obviously a challenge that we must not underestimate as well.
This is when we go to networks as well. Know that it would be much easier if all the banks came together and decided on one solution and then went to FIMNAT with this one solution, as opposed to every bank applying their own solution. And this is where we go back to Sergali and the ecosystems, to come together, and actually progress is done better by a network of people as opposed to on an individual basis. No, Sergali?
Absolutely. And I think we have done something in Switzerland in general throughout various organizations to create and show the world that the value of network matters. I mean, just a step aside from this conversation, I think Swiss people would agree with me that personal and corporate network in Switzerland is one of the key components of career building here. And that really drips into every single corporate culture of large organizations here. So it's back to my comment about the limits of current practices and artificial intelligence inside the banks. VC being the proposed solution to ensure a stable inflow of innovation. Having a network is everything, truly. Only through the network, most of the investors actually invest. It's because someone else has already invested or recommended. That's it.
It's let me link a parallel, but with Switzerland and Singapore. Actually, just I recently, like 6 months ago, moved back actually from Singapore to Switzerland. There we see the networks actually a little bit differently, as the government is actually, the regulator is actually maintaining control of the entire ecosystem of the financial innovation and financial industry. So GovTech or other organizations that are actually managed and centrally controlled decide and practice and test proof of concepts of different solutions that are out in the market. So most of the innovation actually comes from them, and they are the ones that deploy it across the board to most of the players. So on one hand, you could see that it's centralized, so it's not really following the decentralized model or DeFi model of future of finance. But at the same token, we know that the centralized solution is properly deployed and properly controlled and properly regulated, in line also with the MAS regulation for the innovation and for the control of the banking system and the financial system. So there's comparisons which are similar, there's comparisons which are not similar, but generally we can link the parallels between the two countries, as one and the other model both actually prove to be right going forward. So yes, networks, as mentioned by Sergei, is exactly the key to success.
There's a reason they call Singapore the Switzerland of Asia.
There's many reasons.
There's a lot of similarities between Switzerland and Singapore. I think one big difference is actually how the regulator behaves, right? So in Switzerland, I think they're more like not playing the one who wants to, really foster innovation. It's more like really regulating, but from my point of view, in a quite clever way. So not regulating actually specific use cases, regulating the technology. So it's a difference, if you look at, what's happening in Singapore, where it's very much top down, right? Very centralized, MIS driven, but they have the beauty of, having a lot of power of influencing and attracting a lot of companies coming to Singapore, right? So that means they're a little bit faster in attracting capital and, creating that, ecosystem than Switzerland, but there are a lot of similarities because both countries are small, so they have to play a specific role within the industry, and I think that's also a reason why it perfectly makes sense that there are a lot of joint forces, initiatives going on, and there's going to be the Point Zero Forum this week here in Switzerland, where it's very much aligned with the Singapore FinTech Festival, which is the same organizer. So EMA is coming to Switzerland, and there are a lot of exchanges also on government level. I think from that point of view, that makes perfectly sense. We from F10, we run incubators in Singapore, we run incubators here in Switzerland. So we see a lot of also network effects of connecting companies between Asia and Europe. So from that point of view, I think it's a very interesting aspect also to talk a little bit about differences of the ecosystems. And especially when it's about regulation, you see like the two different approaches. But at the end of the day, I mean, it's all about the players and how they interact with each other. And it's not really right or wrong from my point of view.
Well, I half agree. I think it's very, very important that you have networks, right? You see it in areas where you don't, like Excelexis, which has been mentioned, which is really focusing on circular economy projects. And there is hardly a network there to support it, right? There's maybe, I don't know, I can count the investors in Switzerland on one hand, right, that are focusing on that. And the same was true for FinTech and then everything that is today, the greater network in this area. And I think we really, really need people to work together, because that is really what kind of gives everything a push to, well, hopefully make it come true, right, at the end.
While we're on the topic of accelerators, maybe Andreas, you would like to tell us a little bit more about F10 and how it went from a local accelerator to now a global one. And maybe to tell us a little bit, I mean, you've already went into a little bit what you do on the global scene, but what's been your vision for F10 and what's been your main learnings these last few years?
Yes, thanks very much for that question, and it very well fits in the discussion before. So we consider ourselves as a global innovation ecosystem with the ambition to bring more innovation into the industry, and we want to be inclusive. So we don't only act as an investor of investing into pre-seed companies. We also bring in the corporates, the incumbents from the industry, because we very much believe in exactly what we have discussed before, the open innovation approach. Right, that innovation is not happening within the corporates; it's actually happening outside. And we not want to make sure that at the end of the day, both sides can actually benefit from this. So bringing together the two different worlds, that's kind of our ambition with F10. So we're investing into early stage companies. In the meantime, we're active in four markets. So in Switzerland, we started back in 2015 with running a lot of incubators. I think we've incubated around 120 companies in Switzerland already. Then we went to Singapore because we saw a lot of similarities there, very vibrant ecosystem. Also the chance, obviously, to reach out to the Southeast Asian region there and replicated actually what we have done here. We also learned that it's a bit different in Singapore than in Switzerland, because there's a lot of money flowing from the government into corporate innovation, for instance, which is a bit, like a competition to our model, because we offer services to corporates that they come to us and we help them to find the right startups where they can invest or partner with, which is a bit different to here to Switzerland. But I think from a focus on the financial insurance industry, both countries have established financial centers, and that's why we said, okay, it makes perfectly sense to cover these two markets, because innovation is not only happening in Switzerland, obviously, even though we have very good technical universities and so on. So that's why we said, let's go to Singapore and build the bridges. That was our first step. Then he also said, we want to have a presence in the European Union with a big home market. That's why we went to Spain, which is actually a completely different thing. So if you look at the ecosystem there, I think it's I would say, like not as developed as Switzerland, but it's, you know, from a country perspective, much bigger. There are a couple of very digitized banks, I would call them, right? Which also, you know, are very much into venturing and investing and corporate venture capital. So that was our third step, and the last step of an expansion is now, you know, we're going to the Nordics, Baltics region, but with a very specific focus on climate, fintech, and sustainable finance, because we learned, like, you know, up in the Nordics region, like there's a completely different mindset around that topic, and because we believe very much into the potential of, you know, fintech, you know, influencing, or fintech becoming the catalyst for capital flowing into climate tech. We are now running a specific dedicated program in Stockholm for this, and that makes us, you know, becoming a much more global network. We're not covering all markets. I think one of the next steps for F10 will most probably also be covering some emerging markets, calling about Africa or maybe Latin America, which would then complement the global network. At the end of the day, you know, we want to have the best startups, pre-seed startups joining our network, and we want to have on the other side the most innovative and you know, digitized corporate partners.
One final question for you. Earlier on this year, the rules for the scope of investing for pension funds was laxed, allowing in pension funds to invest into fintech startups. Have you seen this already adopted by pension funds? Have you seen an inflow of cash after the laxing rules?
I think there is something going on in the back, I would say. As always, you know, here in Switzerland, things are not, you know, made public at the very early stage. I think there's a movement towards that. I haven't seen, you know, massive money flowing into startups now from pension funds. I think it's also maybe, you know, from a timing perspective at the moment, probably a little bit the delicate thing, because the market is going down quite a bit. But I think, you know, it's a long-term game, right? We are all in VC, so we know it's not just something you can achieve results within a short time. So I think that change is definitely good. But the question is a bit, you know, how do we execute it, and, you know, what are the right models to implement it? So I would expect that, you know, pension funds now also start to look at, you know, VC funds where they can actually maybe do fund investments. Mm-hmm. I'm rather skeptical on, you know, pension funds becoming own VCs, because I think this is definitely not their turf. So they should, you know, make up their minds a bit and find a strategy how they can, you know, cleverly deploy their capital. But also at the end of the day, then generating the returns, because I think it's not so easy. It seems, I mean, it looked quite easy the last couple of years, because, you know, everything went up like crazy. But now, you know, when you are a little bit in a different market situation now, it's also differentiating a bit, you know, those who really can make good deals from those who just, you know, spray and pray. So from that point of view, yeah, I'm very curious to see how that develops.
Thank you, Andreas. Me too, absolutely.
And also, just a little comment maybe for you, Andreas. How is it for you guys in terms of focus? Because what we have actually experienced and seen that in VC, one thing is obviously to be generic and to be obviously open to new innovation, new technologies, new solutions out in the market, and finding what's interesting. And a lot of people are sort of scattered, going around, oh, I find this interesting, I find that interesting. But isn't that better that some of the VCs are actually focused on certain pillars and say, okay, you guys are focused on 4 pillars, let's say, some other focus on 1 pillar, like Günther or myself, we're focused on AI, they're focused on circularity. I find that this way, springing out or bringing the innovation in the industry further is actually more accelerating in its own self, rather than being spread out.
I mean, I'm 100% convinced on, you know, on being dedicated on a vertical or maybe an industry, and not being the completely generalist VC, right? Because I think, how can you actually make sure that you have enough expertise? And also, how can you make sure that you can really create an ecosystem with different, different players who help you actually to do the right investments if you're investing in literally everything. I mean, I would not even be able to, say, I'm able to do a good deal within life science, for instance, because I have no clue about life science. So I'm a little bit skeptical on, this very generalist VC who invest in all different aspects. I mean, from the portfolio diversification point of view, that's maybe clever, right? Because you don't have actually a risk into one specific industry, but from an expertise point of view, it's very, very difficult, I would say. So that's why we only focus on finance and insurance, for instance, but there obviously we also invest in many, many different sub-verticals to achieve the diversifications in the portfolios. But you can still benefit from what we have learned in payments, for instance, also for lending, because there's still, similarities, the underlying technology is maybe similar. You see the business models also you can compare. But I think this is, for me, it's clear, right? Focus on something which with the, respective ecosystem, helping you actually to do the right investments. This is definitely a competitive advantage compared to, being a completely generalist VC.
This is amazing that you guys are into intensivity when it comes to investing into something specific where you build up, the know-how and the base of expertise and everything. However, one thing that Jasmine and I had a earlier conversation about the concept called curation. Large organizations that have clients, but specifically talking about private banks, we're all about curation. When it comes to private clients, they would like to know different things, very diversified things. And when it comes to innovation and venture capital, they would like not only the banker, but also a partner of the bank and maybe another client to converse with them on what they think about various types of innovation and where the industries are going and so on. Therefore, there is a counter opinion to being intensively specialized into one type of VC, to be also generalist enough in order to curate your audience. When the audience comes through to a large organization, they ask this large organization to be the one-stop shop for all kinds of questions. And I have experienced quite some occasions when clients or groups of clients would come in and ask us about life sciences and ask us about all kinds of other startups, but also because they start the startups, they have interests. And I think it would be correct to not leave out the next generation of clients that is the most sort of startup friendly generation that currently produces questions. I'm sure you've heard of research that shows that next generation who inherits the money of the first generation, most of the time does not want to hire the same banker. And this is what the banks are trying to counteract right now by curating the next generation, the topics that are interesting to the next generation, and clearly be really everywhere a little bit generalist, but at the same time, an expert in fintech specifically.
Well, I think it's very important that you mentioned that, because just looking at the classical Swiss banking scenery, that is very much tailored to where it came from, right? It's essentially, if I need to break it down, is an environment that was built by man for man. And if you look into the next generation, that's going to be very diverse, right? So it's going to be a lot of work to be done in there. And I hope the technology will be leading that way, right? But I think that many will not make it also, to be honest, right? And this is also a chance for new guys entering, and guys and girls, I should say, entering that space, as we're hopefully seeing it very soon as well.
Fully agreed, Günther.
I think also one point just to mention is certainly, yes, it's going to be diversified, but at the same time, it's also going to be multi-generational, because before that was the leading and the working generation that was leading was deciding on the banking model for the family. Now is the entire family, including the kids and the teenagers, who decide themselves where they invest, what they do. And now we know the millennials are taking the predominant role within private banking and leading the banking forward. And they obviously have a very different approach in terms of control over the banking system and technology that they grew up with as technological nomads or technological, so they grew up with technology basically. And now we look at the Generation Z, that's a completely different ball game when we're looking at gaming actually entering banking, and that sort of level of control where you play and you put banking and financing at every level of your day-to-day operation and day-to-day being.
Any final remarks?
I guess maybe I'll make a final remark. Since we've talked about really many things on this panel, but I'd like to propose a call to action. I think it's all about network and curation. Unless we have a unanimous approach to how we build this larger global ecosystem together, so that everyone has a sort of at least a fallback standard entry into it, we won't be able to exclude duplication that currently happens so many times. And specifically regarding Swiss ecosystem, I think Switzerland is finally coming of age to enter a more efficient future where Swiss organizations or international organizations that are based in Switzerland are more open to collaborate with everybody else in the world. But specifically, I'd like to make the two accents here, one on venture capital as a sort of the asset class that gives us a ticket into innovation. And the second accent onto artificial intelligence, even though it is an overbuzzed, overhyped word and term, I'd still like people to know what AI means for them and how AI is going to help innovate the, I guess, the banking industry from one side, but really just about any industry from the other side. When you put all of these together, you create a community that is curated and that is interesting really to anybody, even the bystander, because it's about learning something new and becoming future-proof.
Thank you very much, gentlemen, for having joined us today.